Good day, everyone. Well, as you know by now, the models have switched to cash. I think there was basically flat, finished flat on the last buy signal. Basically, it looked like with the Russian issue on the table, which is what caused the dramatic sell-off earlier today, it was best to just close out the buy signal and move back into the safety of cash. Given a number of factors, not just the Putin issue, the Russian issue, but also this rally has, as we all know, these rallies can be baby stepped higher with QE on lackluster volume and not a whole lot of leadership. And the danger there is that if you're in cash, you could end up missing out on market averages that then continue to go higher. The risk of going to a buy signal, of course, is that you don't have clear evidence of a firm rally in place, and you can see even on the S&P 500, if you look at a weekly chart of it, the uptrend's been pretty soggy since January of 2013. I mean, it'll take a few steps higher, then a few steps back, but this uptrend, one could call it relentless because it does keep going higher, but nevertheless, it's not an easy trend to play. Which is why a lot of funds have been having trouble, and trend followers have been having a heck of a time in negotiating with this sort of environment. But the ice cube on the ice, really the tipping point here in terms of switching to a cash signal was the backdrop isn't good, but the fact that Putin's a bit of a not just a wild card. He's a very aggressive leader. He has aggressive tyrannical mentality in terms of how he runs his country. And given the Russian action into the Ukraine and Ukraine's response back to Russia could incite an escalation of measures instigated by Putin here. Wouldn't surprise me one bit. And of course, that would cause the markets to sell off temporarily, at least. These crisis situations are generally resolved in a short amount of time, but given that the market averages are, within spitting distance of their highs, with the Nasdaq off only a fraction of a percent, the markets could easily head a lot lower. A lot lower meaning a few percent to several percent, which in this kind of market environment is quite damaging, as we've seen to lead to stocks that have leadership characteristics that typically will sell off a whole lot more than the market averages. So it's best to keep your powder dry here and wait for shorts to set up, or actually, not only that, I think they have set up. We're going to go into more of that in detail in this webinar. Gil?
Good day, hosers. Yeah, the market's, I think the market's showing...
Gil, can't hear your mic.
Oh, sorry. Good day, hosers. I'm here. Can you hear me all right? Am I okay now?
Yeah.
Okay, good. I think the market's just showing it's exposing its soft underbelly, as I tweeted earlier, which is what's going on in the real world and the geopolitical risks that the situation in Ukraine presents. I think that the initial reports were that there was a so-called peace convoy. The headlines out of Europe yesterday said that Putin wanted peace in Ukraine, but I think there's a sort of a mistranslation there, or something lost in the translation. I think he really meant he wanted a piece of Ukraine, but I guess we'll see how the next few days clarify that particular point. But I think the news now is that there was an armored column entering into Ukrainian territory, and the Ukrainians attempted to take it out. I think they destroyed a part of it. I don't know how much of it they did, but it seems to me, Dr. K, that Putin might use this as a pretext for attacking the Ukraine, but that's a tricky issue, I think, and I spent a lot of time at Stanford studying the Soviet Union. I majored in economics and Soviet, or not Soviet, but Russian language, and then my senior year I was going to double major. My senior year, the Slavics department got all huffy about the fact that so many people were using them as a minor and not a major, and so they changed the requirements, and that kind of aced me out of that. But I did a lot of working with Soviet scholars who came to Stanford, and one of my things was to show them around campus. I always loved showing them the store, the student store, which had more stuff than even GUM, which is a big department store that the Soviet Union had, and they were pretty well blown away by that. But my sense has always been that the Russians realized that even back then, the Baltic states, including Ukraine, Poland, etc., East Germany, Hungary, Czechoslovakia, etc., they would not necessarily be shoo-ins as allies in any confrontation with the West. And you saw once Gorbachev came into power and reversed the whole Soviet hegemony in that part of the world, that these people readily, shirked or threw off the yokes of Soviet domination, and so they're not. I don't think they're slouches in and of themselves. And the Soviet Union relied on a lot of these countries, particularly Ukraine, which is really the center of economic and military power in the old Soviet Union. I don't think that they can just push them around necessarily. So this could either get sticky, and like Dr. K said, Putin is a pretty intransigent SOB, and this may be what he's looking for. And what does he have to lose, really? I mean, Russia is a dying country in a sense, because demographically people are just leaving. Nobody immigrates to the Soviet Union. You're not planning on immigrating there soon, right, Dr. K? Even though you visited, no. And so I think that the only way they can grow their country is either by annexation or by running the price of oil up to 300 or something a barrel. But so all this is to say it's pretty sticky, and I think you again have to approach the market on a very concrete level. And I don't pay so much attention to the indexes, but to me, I had decided that on Friday afternoon, and that was after the last webinar, that the pullback here, that I wasn't really interested in buying anything, but then you had this jack, this was wait on Monday, yeah, so you would have been here. So this kind of move here looked to me like we might be setting up to move higher, and we did. So, I buy some Tesla, some Netflix on a pullback, some Twitter and other stuff. You can get up, 5% pop, even bought Pandora Media, which had a nice jack on Wednesday, and I played that move. Yeah, a little pocket pivot here. But, that's all there is in this market. And so, to me, on a granular level, it's basically a short-term trader's market, a swing trader's market, and you have to you get these moves one way or the other, and it's usually when things are pretty grim that everything turns the other way. But basically, what do you got going on right now? You're just in this choppy range. Summertime in the market, you run up to the highs, and they sell you off the peak, and back down to the lows. The thing you might notice about this low is that it's actually, when you pull back in here, there's actually a level of support in here, so it's coming down onto this top of this big cup. So that's what the NASDAQ did. So that was a logical point for it to rally, and hung out here for a while. It looked like it was going to break to the downside, but I think for now there's probably a little bit too much support in there for that to happen, so it may make another run at it on a pullback, but we'll see how this plays out. I just think that right now there's a lot of uncertainty. I was on the chat room this morning. I told everyone just short the crap out of Green Mountain, which jacked in the morning. I think probably on the news that Coca-Cola bought some Monster, and I think Coca-Cola bought 16% of Green Mountain. I think that was announced back in here. But of course, that might have been them buying it. I don't know. But anyways, this thing has jacked yesterday up to the 65-day exponential. You could use a 20-day. You could use a 10-day. I mean, you're basically in the zone, and it's rolling over this morning. Illumina is another one, and it jacked up near the 50-day. I'll use the weekly chart here, and you can see it's close to the 10-week. To me, you're at the top of the range, close to the moving average. You can put some out there. You're into this area of overhead right here at about 170. So, close enough for horseshoes, hand grenades, and hydrogen bombs, so we're fine there. And then the other one is TRIP, which ran right into the 65-day exponential. That's the black line, and the 20-day this morning. And there's a little bit of overhead. So, I'm willing to test these. If they push against me very quickly, I'm usually gone. An example would be something like Amazon. I thought it was I could attempt to short it right here at the 50-day on that news of some, I don't know, credit card reader or something. I don't know. Does that change the fact that Amazon still got negative cash flow, I guess? But in any case, rallies up into this structure here, runs into low resistance, comes in. I thought maybe I was in the money here because it reversed on the day and closed near the lows of the day, but then it turned around. So I just covered at the 50-day moving average. Now, I don't know. We'll see if I want to short this again. But what I like right now, if you think about this is sort of a more stale setup. So this is topped over here. Here's the peak of another right shoulder, but this is basically your neckline area around, I'm going to say 350 or so, and it's a little more stale in the pattern. Same thing goes for things like, say, Workday. All of these could just be forming right shoulder turn. I'd be keeping a close eye on them. Yelp, Data is another one. These are a little further down. So what I'm kind of interested in, and you might have noticed this, is that a lot of these are recent late-stage base failures. So I'm thinking is they may have some faster downside from here, and so I'm more interested in going heavy in these. So, you know, I've dabbled with some of the other ones, and they're kind of up and down. You know, if you just, let's say, look at Workday is trying to break out here. But for all you know, this is just part of a right shoulder. You really can't tell for sure. Not a lot of volume. You had a pocket pivot here, but not much else after that. So not too conclusive there. And you see this one, Data, trying to rally the other day, and it's not really going anywhere. But it's tough to short in here because it'll drop, you know, drop around. You really have to, or bounce around rather, and you really have to be watching out for some of these rallies to hit. So this looked pretty strong here. So I'm keeping a close eye on Yelp, and I actually did put out a little bit of it up here because you're pushing right into here, and it might be a similar situation. Let me see. I'm in at 96, no, 76, no. Take that back. They didn't fill me. I can't borrow the stock, Dr. K. What the hell? Anyways, that figures. That means it's probably going to blow to pieces after this rally. The thing is rallying. Why shouldn't I be able to borrow it? Anyways, oh well. I'm trying to mess around with something that I wanted to show everybody. But if you have IBD and you go to the market, and where they have the market charts page, which I think is page B2, you know, as Dr. K was saying, the funds are having trouble making money. If you look at the mutual fund index, you'll notice that it's not doing very well, and it has not participated in the market's move back up towards the highs, at least on the NASDAQ. So, you know, Bill O'Neill used to tell me that when even the best funds can't make money, the markets really stink. So I think that's the case right now, and so that's one of the reasons why you had to be cautionary on this recent follow-through day, and now the IBD is using 1%. Dr. K, what drives? You know, somebody asked a question pretty much point blank. Why did the models suck so bad? And I'm just curious, what drove the index, or I'm sorry, the MDM to a buy signal in here? Can you explain that? Give anybody any insight on that, and also address the fact that why the models aren't as effective as they might be otherwise?
Right. Well, I mean, first, just go to the FAQs, and I mean, we've discussed this ad nauseum for the last couple of years. So I'm surprised that someone must be new here.
Well, that
I'm not going to go over it again. Sorry.
I said that happens. You get some new subscribers, so I think they're
that's fine.
And it's helpful to explain it. So
go do a search on FAQs for market direction model, and we talk about it quite a bit. I mean, in a nutshell, you've got compressed rallies that are not the forceful ones that the market's normally used to, where you're going to gain quite a bit when you do get a buy signal, and at the same time the market sells off just enough so that it turns most models to a sell signal because leaders look like they're falling apart, the market looks like it's falling apart, and then lo and behold the market finds its floor within a matter of days or less and starts going higher, starts tiptoeing higher. So it's a manipulated market environment, which makes it very difficult to use more relied upon indicators like price volume and leaders and in major indices. What has worked, and Gil and I again we've discussed this quite thoroughly, are much more shorter-term measures of trading the markets. So that would be down to the swing trade or day trade level. That's where Crossbow and 620 have been born. Those tend to work. It seems like those work regardless of whether the market's trending higher or lower. The market can do whatever it wants to do, but the granularity of these types of strategies is on more of an intraday level. So it's worthwhile learning the technique. However, if it's not your bailiwick, if it's not your style, then there's nothing wrong also with just trading less in this kind of tough environment. Livermore used to talk about finding the right environment to trade in, and if it's not, he used to talk about how much money he used to get lost by so many investors who didn't have the patience to wait out the difficult environments. And I've looked into it myself since 2000. This last decade, there's only been a few real deep windows of opportunity. And had you traded only those, you would be doing pretty well, actually, because there are lots of periods where a lot of money has been lost due to onerous market environments. The buy signal, the model went to a buy signal recently, just on the basis of what I said earlier. You run the risk, if you don't go to a buy signal in this kind of environment, of missing out as the market starts to tiptoe higher. You could see that in the S&P and the NASDAQ, that when these markets have what seems to be just enough momentum on their side, they can go into an uptrend that can persist for a number of weeks and result in however many percent gains. But if you're sitting in cash, then you're not participating in that. Likewise, when the market drops, if you look at the S&P, it hasn't corrected more than 6% since January 2013, which is unprecedented. The weekly on the S&P tells the story very well. This is a highly abnormal pattern. Clear manipulation has been going on. So now knowing that, you can trade it as a longer-term feature around, say, a core position, around an ETF, or you could trade it on a shorter-term level. And the MDM has adjusted to some of these issues that do occur, but it hasn't been an easy environment at all. It's just when it has to see a material change in the market to take any kind of action, first of all. And that material change often is a bit fuzzy. It's not a very clear material change when it does occur in this environment. And we've mentioned the number of times there's a number of investors that have been running funds for well over 20 years, and they're running a lot of money. And these guys have been in books like Jack Schwager's Market Wizards and other types of books where just by virtue of their stellar track records. But since this QE market's come in, it's been really, really difficult for them. And I think, well, no, it is. I don't think. I know that it's unprecedented that they cannot beat the market averages overall over the last few years. And I believe they've collectively been down since 2000 and definitely since 2011, possibly since 2010.
Yeah, I mean, it boiled down to its essence, basically that if you're using any system that's based on the rules prior to these QE distorted markets, especially now, it seems like the distortion has become even more marked in the last couple of years. Those rules don't work so well, and I think that's one of the reasons why CanSlim itself has become a much less effective strategy. So I know they like to write books, CanSlim's success stories, but I know from working there that we used to get a lot of calls and letters from people who really lost a lot of money using CanSlim. And I think if you wrote a book called CanSlim Disaster Stories, it might be a bigger book, because what happens to a lot of people is as you're making the point earlier about Livermore knowing when to stay out of the market. Some people will buy into something like this. They think that they've found the holy grail in CanSlim, and so they just keep buying breakouts until they're just beaten to a pulp and slowly losing money over time, and sometimes getting caught in something really nasty like a Kate, And this thing on a buyable gap up when was it? This past Monday or Tuesday? Tuesday. It had a gap up. I actually traded this. I made money on it, but one of my rules is if I buy a buyable gap up and I think I'm near the low, I won't let it get more than 20 or 30 cents within, say, a quarter point within my entry point. I'll just unload it if it starts coming in, especially in this environment. Market's breaking the new lows. We're down 103 on the Dow. Ugly. Anyways, let's see. Some of that's about a crossbow. A crossbow is basically Dr. K's version of this chart. I showed it to him at one point, and he took it and added some things that he uses. But I find this a very effective chart as well, and it's basically 620 using a 20-period exponential and a 6-period exponential moving average, and using the crosses. And MACD is set up the same way. Some people ask, you want to use a simple moving average or do you use an exponential, and then they're all anal about, the entry point being 3 cents difference. It really doesn't matter. I kind of use this more as a guide for those of you who are new, and that's what we're referring to. So haven't put out any literature, haven't written any articles about it. I'm not even sure I want to put it in the new book, because I think what happens with a lot of this stuff, and this is a trap for most people who are new to the markets, is they're running around looking for some holy grail that they can just mindlessly follow, and they're going to make money with very little effort, you know. And it just comes off too easy. That's one of my beefs with IBD in general, is that I think they make it look too easy, and they really don't illustrate, and I mean, you know, discuss in very direct terms the risk inherent in a lot of the stocks that they'll traffic in. And people don't realize the market is very risky. You can get hammered. You can get creamed. I remember that time. Remember Lycos, Dr. K? And I shorted
Oh yeah.
50,000 shares of that thing in my own account. I don't know where I shorted, like around 55 or something. And then towards the end of the day, it's jacking to the upside like a buck right before the close. And I remember the next day, Telefonica de España, TEF, I think it is, was a symbol back then, announced that they were going to buy them. And I'm thinking, oh, God, I'm screwed. This thing's going to open up at 90. It opened up at 55 or 56, like 2 points above where I shorted it. I covered that thing so fast, and then it did take off. But, you know, you got to be quick, and sometimes that's not good enough, especially in markets that gap around a lot. So, you know, these days I like to play Johnny Cochran and say, you know, if you can't be nimble and you can't be quick, then maybe in cash is where you should stick. And I think Dr. K made that point that in confusing environments like this, you're probably better off sticking in the cash. Anyways, getting back to, what was I talking about? I don't know. You get to the top of the range here, you come in. Okay, what else is new? S&P runs into the 50-day. The trick here was the NASDAQ getting above the 50-day going to lead the S&P out, or was something else going to happen? You can see that basically you ran into different levels of resistance in the NASDAQ here at the peak of the range and here at the 50-day. So, you know, it all looks quite logical. I put quotation marks around that in terms of being oh, look at this, down 131 now, and the NASDAQ down 23 after being up a fair bit. So it's all very logical in terms of looking at the charts. If you just looked at the charts, you didn't know what the news was, you would say, okay, yeah, technically this all makes sense. And I think that's really what you do. But I just try to keep things to a very concrete level and go long stocks when I think you got a shot at making some upside, and then short them when they come into areas. Doesn't mean I'm not going to get stopped out like on Amazon, although it's probably going to work now that I'm out of it, and I covered right around 330. But that's fine because I've got some others working. So, you know, Yelp I think is probably shortable here if the market's weak. That's probably going to be it. Somebody came out with a buy rating on the stock and an $85 price target. That's here. That's not that impressive. You know, but analysts don't know anything. If they did, they wouldn't be analysts. Just remember that. Let's see. Let's go to some questions. BCRX. I don't know. This is wasn't this some, I remember when the swine flu or something came out a few years ago. I think it was in 2006, and this thing had a big move. Let's see. Way back on. I actually made some money in this thing. Went from like 15 to 20 something, and I traded that. That was in 06, I think. Yeah, this move here.
Oh, 05 had a nice move.
Yeah, 05, that's it. 05, and then 06. I remember this move here. This was playable, like from 15 up to the 20s, and that was it. I don't know why you want to buy this one. So it doesn't look any good to me. You know, like I said last week, you got to be careful here. So you get a breakout here because of some news. I don't think they're making any money, are they? Bunch of garbage, probably.
I don't think they have for a long.
Yeah. So I don't know. I think it's just getting play on the news from Ebola, as a number of other stocks are too. So don't be a monkey and just start looking at something you think is hot because it's all over the news and every idiot on the planet is buying it. When this thing isn't that. It's pretty thin. It reminds me a lot of Plug, which we derisively refer to as butt plug, because anytime if you buy any buy signal in this thing, it's just going to plug you. It doesn't really go anywhere. Market's all over the place. Let's see. We're making money today on the short side pretty nicely. So, but this thing should blow apart more if it's really going to work. So we'll see. Taser, not buying Taser. Why would I want to buy it? That's not a buyable gap up. It's way down in its pattern. Look at that. Why would you buy that unless you're a moron? Come on, you guys. Give me some better names, will you? PEIX. Now, there's a good one. I mean, I've liked this one down. I talked about this in the chat room. We had some pocket pivots. Doesn't really have, you know, PEIX. I think the earnings are sketchy. They're losing money. But, you know, in this market, that doesn't keep anybody. No, wait a minute. That's wrong. That's wrong. They're actually doing pretty well. A lot of big pickup in sponsorship. 89 funds own it after the June report, the mid-June report, versus 36 in the mid-March report. So, you know, that looks fine. It's holding up. If you bought it down here, I think we probably should have put it out as a pocket pivot buy point somewhere in here because it had some nice entries in here that were pretty low risk. It's moved higher. So that looks fine. But, you know, if you own it, you can sit with it or use it 10 days or stop or something or take profits if you want. SA, what is this? There's nothing here. I don't really see anything. I'm not into it. Trades 478,000 shares a day. It's a $10 stock. So mining, gold, I don't really think so. Gold's probably turning. It was getting hammered earlier this morning on, and it's pretty funny because I saw the headlines this morning. Gold down sharply on easing geopolitical tensions or something like that, and then bam, everything gets hit with the news a little later, and so much for easing geopolitical tensions. Let's see. I have read, maybe I'll let you answer this one, Dr. K. I have read that HFT increases volume, particularly on down days. Maybe that's why volume looks heavy on down days and light on up days. Huh?
Yeah, I mean,
I don't know. That
HFTs do have a distorting. They do distort the data. That's clear. I mean, it tends to be more problematic for day traders. A lot of who've gotten knocked out of the game because of the HFTs that have joined. But as far as price volume action on a daily level, I think that really is far more distorted by the QE environment we're in. I mean, HFTs have been around for many years, and yeah, granted, their presence is increasing, and so the distortions, you could say, are also increasing. But distortions, price volumes seem really predicated on the Fed's manipulations more than anything.
Yeah. So you know. Somebody says, oh, maybe this will change if HFTs disappear. I mean, we'll see. I personally think a lot of the financial institutions are in bed with the government. The government allows them to do what they do. I mean, if you read Ed Sekoda's book, The United States in the 39 Today, I mean, it reads like a sixth grade textbook, but I think that makes it very simple for everybody. But you read what he's talking about, and really the problem that has evolved over the decades, say since the early 1900s, since the Depression and World War II, is that corporations have gotten more and more in bed with the government, and the government more and more chooses winners and losers. And I think the whole HFT thing is all about that as well, because the government's letting them do this, and I'm not sure why. Maybe because it helps to manipulate the markets and keep them floating. I don't know. Because everything is really an illusion, but who knows? Somebody asked, what was the news on Kate that caused a wild move to the downside? I mean, as far as I'm concerned, the news is relevant. It was a conference call, right? So you better get yourself some better news because Briefing.com had it, and they pointed out. But the bottom line is you don't need to know the news. If you're buying the Bible gap up and you can set a low on the day, and I think at that point it was like 70.83 in the morning, or 40.83, I'm sorry. When I bought it around 71, I think, and it was, or 41, and it was 40.83, I think was the low. And so when it started, it ran up to 73, near 73, came all the way back in, and it started coming in pretty fast. And I noticed that I just hurled it because it didn't look right. And I think that you had to operate on that basis, and if you didn't, like I said, there's two types of people in the market: the quick and the dead. And in this case, you would have been dead. And the one thing that disturbs me is it seems like there are some people who will buy a Bible gap up and then they pay no attention to the stop, as if it's some sort of magic buy signal that guarantees they're going to make huge money, like they did in Tesla perhaps last May when it gapped up to about 67, 68, and then kept on going. And I think in any case, whenever you take any position, people know where your stop is, please. I often am just shocked at how a lot of people get stuck in stuff because they're too slow and too stupid. And if you can't, if you run into a lot of this where your stops are hit and you're not paying attention, you really shouldn't be investing. So, anyways, curious as to why Guild would not surface as a strong buy in your prior discussions. Well, I don't think you really had. Yeah, it had some pocket pivots on the way up, but I'm not, into calling something a strong buy. But I never really trusted this, and I don't trust Celgene, I don't trust Biogen, even though they're all acting okay. But they're pretty volatile, and they're all over the place. So I don't really need to trade Gilead. It's been a slow mover to the upside and steady, and supposedly the Sovaldi sales are going to be big. But I don't know. So we don't. Not everything that we like or don't like goes higher or lower based on what we think. So if you think a stock is good, then you should buy it. But like I said, I don't need to kiss all the babies. What news source do you tend to monitor during the day? Briefing.com works, so GWPH and EXPE. My thinking on GWPH is that you only want to buy this on weakness. There is a pocket pivot, so it's running up and coming in, but I don't know. We'll see how this does. There's your weekly chart. It's holding in pretty tight along the lows, but I don't know. If you buy the pocket pivot, where's your stop? That's all I have to say. Expedia, I noticed, was holding up. Now it's coming in a little bit. It's hanging up there. I don't know why, but it is. And it's just hanging up there, so nothing really else to say about it. ZU, is that Zulily? Piece of garbage, leave it alone. Is VMW shortable here? Meaning what? If you can borrow the stock, I guess you can put a short order on it, so I guess it's shortable. I don't know, but when you say is it shortable, are you asking is it in a position to short? I suppose you could say it's at the top of the range and maybe it'll roll over. It looks like you're in a right shoulder. That's possible. So I guess you could short it if you can borrow it and use the high of the day as your stop or whatever else you want to use as a stop. But whether it's definitely going down from here, I don't know. And yeah, stocks can be shortable above the 50-day moving average if they have a point. You can see some overhead resistance, and it goes beyond the 50-day, sometimes as much as 5 or 7% before it breaks down. But a lot of times I'm just watching to see how this breaks down. So, BITA, well, sticking straight up in the air, what do you want us to tell you? I mean, to me, asking about the stock seems kind of stupid. Pardon my French, but it's running up. So if you bought it lower, you're doing great. You're not going to buy it here. And if it continues higher, you're just watching until it starts to look like it's going to roll over. That's what you're asking. But I don't know what to say about it here. ATHN, okay, again, same thing. What's the deal here? I guess you could have bought it here. It's a thin trader. I think it's more another one of these crazy Chinese stocks, right? Is this a Chinese stock, Dr. K? Auto Home? It's hit my radar, but it was hitting my radar down in here.
Oh wait, Auto Home. I think this is that real estate company in China. Yeah, they've got the that CN website. They have actually a variety of websites.
So up here,
yeah, they basically got.
Are you going to buy it?
They've got content to all these automobile buyers as well. So they're involved in basically mostly in car sales.
Yeah, so it's a thin little stock. I saw the pocket pivots in here, but it didn't really get me that excited. I think it's moving on earnings. Just came in on earnings here and rallied up. But what are you going to do with it now? There's nothing to do. So, and I would hope that you're not asking us to bless buying a stock up here, mainly because you're looking at it really more through the greed angle. It's like, oh my God, this thing's run up. I got to get in it now. Hopefully you bought it down here, and you're more interested in what maybe you should sell into it. That's up to you, into the move rather. Somebody asks, how do I know which BGUs or pocket pivots you report on our stocks you think are worth buying? I thought you liked Plug in spite of the risk. Well, Plug had a buyable gap up that morning. We don't. we put out pocket pivots and Bible gap ups. They're not opinions. They're not based on whether we think something is a strong buy or a not so strong a buy or whatever. What we do is we put out technical facts. Those reports are technical facts. If a stock is issuing a pocket pivot, we report on it. And if we think the stock is of high enough quality to report on, then we'll do it. On plug, I don't know, Dr. K. I don't think. I think you sent that one out. I wouldn't. Probably in hindsight, I wouldn't have done that. But because it's a junky stock, it's a $5-6 stock, and it moves on stupid news. So the thing is, if you bought
well,
the Bible,
you have to wait.
Go ahead.
For the right pivot point, basically, you know, if you look at the pattern before, basically this is a type of stock where you have a lot of risk on the table, but a lot of upside, and you can see that where it, you know, more than doubles when it pivots out correctly. Now, out of that on yesterday's buy signal, it was on the basis of an earnings report. So sometimes that's enough to give a stock enough momentum, especially something like this, to get carried up, you know, 10, 20, 30%. Hold on, someone's at the door. 1 second.
Yeah, and anyways, I'll just carry on. And this idea that somehow we know which are the best ones, we're reporting on technical facts. You have to at least have some sophistication, in my view, to know how to implement these in terms of general portfolio management and your trading style and your risk management. So if you bought the Bible gap up, the thing's failed pretty quickly, so you'd be out of it pretty quickly. And I personally don't care for it because it's a cheap stock, and cheap stocks are what they are. Maybe you get lucky and have some big jack on news because you get a bazillion retail investors jumping in on it, and you know it doesn't really follow through on any of it. So everybody's seen the greed factors at work here, and then it just kind of breaks down from there. But you know, a lot of times what I think is my best idea is not. And a lot of times what I think is a crummy stock is not. It turns out to be better. And I'll give you an example.
Yeah, I mean, keep in mind with this stock that you know, when you play this, you just know it's going to be very volatile, as we mentioned in the report. So you have to, you know, keep that in mind. Also keep in mind that on some of these buy signals, I mean, if they're set up just right, you get a huge upside. But when they don't work, then your downside should be quite minimal because you keep your stops real tight. Like on this one, if you bought it yesterday, you know, it's not behaving appropriately. It's not acting right today. You should be selling it out. And you know, your loss, based on, you know, your loss is probably contained within a few percent or something. But again, you know, it's always about risk reward. If you think that out of 5 types of stocks like this, you're going to hit one that doubles, then you're going to do very, very well if you keep playing this kind of stock. I used to have that tendency well, I've always had that tendency. If I see, you know, like Onvo, I played Onvo, and that one I noticed is kind of like Plug. It's a cheap little stock, but when the price volume sets up just right, you can see that on the chart. It will go, and you know, so I made money. Well, I basically doubled my money, or no, almost like 80% on Onvo, but I lost. I played Plug, and I sold it out for about a 3% loss. So that's okay. I mean, I'm still, you know, way ahead, and I'll keep playing these kinds of names, but they have to set up just right. So something like Plug yesterday, I was kind of lukewarm about it, but what tilted my favor was the earnings report, pure and simple. If it was just on the technicals, then I probably would have ignored it.
Yeah, I just ignore it. I don't know. Well, someday it'll have a big move, I guess, and it'll start out this way. And if you get on it right away, then you have a shot, perhaps. And if it doesn't work, like you said,
like a February 25th again, you know, that was a perfect setup. Or, well, if you go back in time on January 2nd, then it's just getting really cheap, so you don't really want to play it there. You know, because these are really tiny. Well, it's not a micro cap. It is a small cap, but it's very volatile, so you have to handle these with care, and you always have to have a position size according to, you know, what you know the stock is going to do.
Yeah. So don't be naive and don't think that somehow we know whether we think something is worth buying. If there's a technical fact that occurs, such as a pocket pivot or Bible gap up, and it's pretty simple to outline the parameters of the trade in terms of your risk tolerance, your risk reward, and where you're going to set your stop, then you can try a position. But it doesn't mean that we like it or what. You know, it's just happening. A lot of them I don't really like in this environment. So Bud. Not. I don't see anything there. I'm not going to short it either. So. True. That's another one of these thin. I think it's a True Card. Is this a Chinese stock? Probably another one of these Chinese stocks. Yeah.
It's one of these another auto stock, but it's not Chinese.
What is it? American?
Yeah, it's just American. It's Santa Monica.
Yeah, I don't know.
Santa Monica.
Oh, it's in Santa Monica. It's probably cheesy then. Let's see.
It doesn't
Yeah, they're
look good on the
losing
chart.
money. You know, EPS minus 320%. They break it out probably because they get a bunch of dumb retail investors buying it, and they run it up a couple of bucks. So I wouldn't mess with it. Baidu. I've seen Baidu. You had a buyable gap up, but it failed. Now it's hovering around the 10-day. I'm not a buyer. I'm not really anything here. I actually think the long side is a dangerous place to be right now, because I don't see the news. I think coming out of Ukraine. Then you've got what's going on in Iraq, and the whole Middle Eastern thing is happening. And so I think there's still a huge amount of risk out there. And if you're playing on the long side, you're basically playing for short-term trades, and that's really all I'm doing. Somebody asked, would you bless all the stocks I own? Yes, send us a list, and I'll get some holy water, and we'll be happy to bless them all. Unless we don't like them, in which case we'll send you a note back saying that you are a moron. So I love that term. I like being. Anybody ever watched the Seinfeld series, which I used to watch? My wife and I used to watch that back, I don't know, 20 years ago when it was hot. And there was the soup kitchen that you went to, and people would order soup, and the soup was supposedly so good that there'd be people lined up. And the chef there, the soup guy, if he felt people standing in line were asking stupid questions or just in general annoying him, he'd yell out, "No soup for you," and then hurl them out. So I kind of like to be that version of the investment guru field. I'm the no soup for you investment guru. If I think you're a moron, I'm going to tell you. You know, Bill O'Neill used to tell us that you get your head screwed on wrong, stuff like that. So you know, people like to be slapped around. RH, a roundabout. I don't know. Here's a little pocket pivot. Is that one right there? No, not really. I don't know. You know, again, I don't. If you want to try taking a position there, go for it. But I just don't see that the long side is going to be all that great of a place to be right now. PCYC, I was thinking of this more as a short the other day. It broke out. I was trying to short it in here, and I couldn't borrow it. So, and it's down. That's what it looks like to me. To me, this pattern looks more like a left shoulder head, and you're forming a right shoulder. That's what it looks like to me. CRM. Somebody asking about that. I like to short this one into the 50-day, and it's broken down a couple of times, rallying back up. It looks like it wants to break out to the downside, but again, left shoulder head, right shoulder. Earnings come out next week. You don't really need to play there. So, Soup Nazi. So that's what it was called. That was the name of the Seinfeld episode. It was based on a true story. So, somebody asked, why is chat mod in the chat room such a I won't say the word, but it is a male appendage. Chat mod's job is to make sure that morons on the chat room aren't saying things that are offensive to others, the ethnic jokes. I know people like to make fun of Chinese, in the way Chinese, because there's no L in their language. They have trouble saying L's. Kind of like the French with the T's. I think they say ZCs, but you don't see people making fun of them. And I just think it's sort of xenophobic BS. We have a lot of Chinese subscribers. They probably have a lot more money than you do if you're an American. And as my daughter said when she explained to me why she's taking Mandarin Chinese rather than Spanish at her high school, she says, well, if I learn Spanish, I can talk to the gardeners. But if I learn Chinese, I will be able to speak to my future business associates or my boss. And I think that's true. And just people doing dumb stuff. And that's ChatMod's job, because I don't want things get out of control. I, on the other hand, can make fun of anybody on the chat room, so I just want you to know it. After all, it is our website, so it's kind of like whoever owns the sandbox decides the rules. Anyways, but that's ChatMod's job, and we are able to expel people now. We are able to put you in a penalty box, and we are able to ban you. So many great options there. We don't have an assassinate button yet, but you know, maybe we'll work on that one. But you know, offend chat mod, and you're in trouble. So French can't say H. Okay. G-Pro. Oh, I would say the person mentioning CRM follow-up weekly looks to be finishing off the right shoulder. It looks that way. So watch, you know, the earnings might be what really finishes it off. So I keep an eye on that. It could turn into a shortable gap down. I don't know, but it was shortable on these rallies. And notice here how it looks pretty good, like it's going to take off, and that's where it fails. Let's see, G-Pro. There's no reason to be playing with this. It's a failed base, so this was the day, and I talked about buying this at the 10-day, and it runs up, you know, 10. I actually ran up a lot more than that. I mean, yeah, it runs up about 15% from there. If you don't sell that, you're a moron. Okay. Something runs up like that quickly, going into earnings, I think you just sell it and take it, and going into earnings, we find out that other people can make their cameras. I think Polaroid is making something they call the Cube now, which looks kind of interesting, and maybe it does turn out that, you know, I thought my thesis on this a couple of weeks ago, based on the Plantronics analogy. Plantronics made headsets, but I guess Plantronics headsets were a little harder to replicate than G-Pro's cameras are, and their sales are a little bit sketchy. The other thing I think is that you have, I think the retail customer is on all levels is probably not as sound as the government data would like you to believe, and I think in general you're going to see some more retail stocks get hit. So. And I think this has a retail angle as just cameras for people, for narcissists who want to film themselves doing things. Let's see. No chat for you. That's right, Tom. So, let's see. Any other brilliant questions? We've got 10 minutes left. Let me see if I can provide any more insights. Let's look at some stocks. I'm watching Jazz here. Possibly a right shoulder rally up into resistance here. You had a couple of pocket pivots, but I don't like the position here in a downtrend. If you look at this, I don't know, is this a pod? This could be considered something like a pod. It's not really that deep, but it is sort of a deep, ugly, cup-like late-stage base, and it has failed. So now you're rallying back above the 50-day, which is very typical action, down to the 200-day, just through it. You get some support off around here after you undercut this low, I guess, and it's a little bit. Notice this pattern's really sloppy and choppy, and now you're up here. Maybe this is where it becomes a short. So I'm guessing. Let's look at on the 620 or the crossbow. Actually this would be considered father of crossbow, right, Dr. K?
Yeah.
Yeah, sort of.
Why not?
Why not? The father. This is what started the whole thought process. And here we have, let's see, what are we looking at? We're looking at Jazz. Okay, so if you look at it on an intraday basis, to me it looks like it's trying to level off and head back up. So just keep this one in mind. Maybe it heads back to the highs. Maybe it becomes shortable there. I'm afraid to ask a question. Somebody says, penalty box is scary. You're damn right it is. We actually have, in the penalty box, there are HFT algos that we've turned loose in there, and they're nasty little buggers, worse than mosquitoes. Let's see. Looking around, I'm just running through mine. Let's take a look at Yelp. Yelp me. So it looks similar to Jazz, trying to level off, but a lot of times these patterns, where they're coming around, you haven't really had a cross here. You did get a cross here, but not confirmed up here. It looks like it's trying to make a little intraday cup with handle, but I'd watch this because I think it could break down and head lower. If the market breaks, this thing's going with it. And so is just about everything else out there. So, like I said, that's why you don't want to you don't need to be long anything here. I think what you're seeing happening in the Ukraine right now could spark a pretty decent sell-off. Why do you need to be there? Because you can buy stocks back. Remember that. So most people seem to get married to stocks. What are the differences between 620 and crossbow? The difference is I use 620. Dr. K uses crossbow. So he's a scientist, so he needs to refine it more. That's just how he is. and that works for him. So me, I kind of like, I'm touchy-feely, and I'm just an ex-cartoonist, so I'm just a loser, and I just kind of feel my way through things. Sometimes blindly, sometimes not so blindly. Anyways,
We've got all our
difference.
we've got our styles. So whenever you're
Yeah.
handed an idea, then you have to really shape it to your trading style. That's
Right.
always key.
And that's probably what we do when we exchange ideas. It's like, yeah, your idea sucks, but I think I can change it into something that I can use. So, anyways, so where are we? Let's see. Let's look at, say, nobody's asked about Twitter. See, Twitter comes off the 10-day. And I bought it off the 10-day, and it's good for a trade. It goes up 5%, and that's not too bad. But you notice there's never a pocket in here. You could say there was a 5-day pocket here, but it stalled. But I'll tell you what my big weapon here is. Let's go to my, where is it? My secret weapon chart here. This is what I use. Instead of pocket pivots, if I see something pulling in, and notice how it's pulling into the 10-day, and I'm going code blue here, sometimes I'll step on a position in there. You can look at a couple other stocks like that. Let's see if this guy in here was looking pretty good. And then, you start to break out, and of course it comes back in. Netflix yesterday, I actually sold my Netflix this morning, but it was doing the same thing yesterday, and you can see that. What was another one that worked pretty well? Let's look at Tesla. Tesla, I went long last Friday. I think it was here, and it gapped out here because you're looking pretty strong in here, and it gapped out here. So guess the gap. That's one way to play this market. You buy something and then look for it to gap up the next day, and guess the gap is a really fun game to play. What's a crossbow? Oh God! Just go back and look at the video when we get it up later. Just a variation of the 620 chart. Let's see, what else? So if you look at, let's see, what are some other ones that I was trading here? PANW, whoops. You notice here you start to get a little blueness in here as it's pulling in and hugging along the 20-day, and sure enough, you get a move out of it. If you're trying to buy into this, it's a little more problematic because it's stalling now. And I prefer to buy them when they're quiet. I don't have to see a pocket pivot necessarily, but I'm watching this chart and I'm using it. So it's the only thing that I have created on HCS Investor. I know there are some screens, but those were created by Ron Brown, so they're not necessarily precise, but they kind of get you into the ballpark, and I sometimes will scroll through those just for the heck of it to see what's there. Can't hurt. But anyways, that's the... Any comments on JD? Yeah, it's just another breakout that fails, I think, but now it's turning around, and who knows? This is kind of volatile, so I'm not really going to buy it here. It's something of a pocket pivot, I guess. You had one here. Earnings came out, they tank it. Now it's turning higher. Who knows? Where it goes here. Maybe it rolls over, but I'm not a buyer. Any other questions? This white wave. Dutch K, you didn't like it last week, but I looked at this, kind of interesting. I drink a lot of almond milk myself. I'm still an old cookies and milk kind of guy, but now I have almond milk with gluten-free cookies. And I got to say that some of these companies are getting pretty good at making gluten-free cookies. My wife also made this awesome gluten-free carrot souffle the other day, and that was like carrot cake on steroids. Anyways, I like to drink this stuff. So you have this gap up move, but it's a very choppy, funky pattern, but it held pretty tight, and I think I did buy this for a trade too. Let me take a look at this. Yeah, and I kind of like this sort of, nice bright blue in there. As it's holding tight, so it looked viable. So that one looks, I kind of like this stock.
Yeah, keep in mind that when we don't like something. Cause I remember last week this came up, and I don't think either of us were into this.
Not really. Yeah. And then I looked at it again. I thought, okay,
it can redeem itself and then become tradable. Just because we don't like something one day doesn't mean over a period of days it might not be good for a swing trade of some sort.
Yeah. So you could just fade us, on some of these things. Let's see what else is going on here. Any other great questions? Dr. K, are you in cash? None of your
Yeah.
business. No, he's in cash.
Well, for
Yeah.
the most part, I still have a core position in one name, but that's it.
Yeah, I'm short up to my nose, I would say. Not up to my eyeballs quite yet, but I'm short up to my nose right now myself. But that said, I was long some stuff this morning. I've been long some stuff on certain days, short some stuff on certain days, and I just move with the market. It's just a short-term sort of funky market. So now you're seeing the markets flying all over the place, and so it's up, it's down, it's starting to break apart, it's starting to come back. It's just very difficult to navigate, and we're in the middle of August, right smack in the middle pretty much of August. And I remember, let's see, a year ago, about this time I just got out of the hospital. I remember the market was just kind of choppy for a little while, and then we started to see some things set up as we moved into September, and then there were some good moves on the upside. Maybe this time around there are some good moves on the downside. I think it's just a matter of seeing where we go from here and playing it close to the vest. If you find a stock pulling into an area of low risk in terms of an entry point, I think you can take a shot if you want to, if you think the market's going higher. If you see something rallying up into resistance that's a weak name that's in a short sale setup, like, for example, the GMCR, ILMN, these are stocks I'm short today. We'll see if I don't cover them and just turn and take my profits and go away. That's a possibility too. But see how these have failed. You might say this is something of a pod, and it failed here. You get the rally here. This is where it was really shortable, and then it's broken down to the 40-week line here, even though it doesn't quite get down to the 200-day line here. And now you rally back up into the 20-day, 65-day exponential. I generally find those are my two other moving averages I like to use, the 20-day exponential and the 65-day exponential as reference points. So it doesn't mean they're magic entry points that if you short something there, it's not going to keep going past you. And if you don't have a stop within reasonable distance of the entry point, then you could end up getting smacked around, as you could have if you weren't quick on Yelp. I actually did short some Yelp around here, but it wasn't going anywhere for me, so I just tossed it. And that was smart because it just kept on going. Now, if I had any brains, I probably would have turned and go long, as I did with P, because I noticed here there's this sort of pocket pivot and was running up, and then it looked like it's going to break down. If you shorted it, I wasn't really feeling anything in terms of selling pressure here, so I turn around and go long a thing, and the next day it's jacking to the upside, and that's just kind of what I'm doing. Nothing really. Gil, did you short before the Ukraine? I shorted before because stocks were just coming up into areas where I would short them, and that's it. I think shorting is a lot, at least the way I practice it. It's a lot like this program I saw the other day that I thought was pretty interesting. It's about these guys up near the Arctic Circle, and what they do for a living is they get glacier ice and they harvest it, so to speak, and then send it to some place, and they're paid for it, and they use it for glacier drinking water. That's very hip, I guess, with all the what I guess are the present-day PC yuppie types. But in any case, that's what these guys do. And so what they do is they take a rifle, a pretty good-sized rifle, looks like a 30-06 or something, a hunting rifle, and they're shooting at these glaciers from a boat. And the idea is that they want to knock off a pretty good chunk of the ice that they can then go retrieve and put on their boat and take it back and get paid for it. But what they're doing, I was watching the program, and the guy's shooting at the glacier, and boom, one shot, and a little chip falls off, and another shot, another little chip falls off, and then another shot, and a little bigger chunk falls off, and then a couple more shots, and nothing comes off, and then finally one shot, and a huge chunk of the glacier falls off. And to me, that's kind of how shorting works. I come in and I just test the things on the short side, pinging them, hitting them as they rally up into resistance, with the idea that eventually, they break down like this did here, say, or this did here. So you kind of see, and I made a lot of money in this one shorting in March and April, and you can see it's rallying up in here, so I might be shorting, and shorting, covering, and then finally I get heavy short at a good spot, and the big chunk of the glacier just breaks off and slams into the ocean. And I'm in the pink, and that's kind of how I work it. So with something like this, I'll accept the fact that I might get dinged with a bunch of little losses, but eventually I might catch it like I caught this yesterday off the 65-day exponential, so it's coming in a couple 3%, so you're starting to get a little bit of love out of it, but nothing special. But just getting shooting away at the glacier, hoping that one of the bullets that you shoot ends up tearing away a big piece of the glacier, and that's kind of my analogy. So somebody says, have you looked at Gilead? Yeah, I've looked at it, but I'm not going to buy it. If you want to buy it, go ahead. Is intraday volatility a warning sign in and of itself? I don't know. Stocks going down is a warning sign. And if I'm short and I'm making money, that's telling me I'm on the right side of the market, for now at least, and we'll see where it goes. So there's no, clues as to what might or might not happen. You just watch what the stocks are doing and you operate on that basis. That's what I do. I don't try to predict where things are going to go. I don't look for little, is volatility a clue? Who knows? Maybe it is, maybe it isn't. I don't know. But it doesn't matter. Is the moon being in the 7th house and Jupiter aligned with Mars, telling you anything? It's that sort of thing. So it's just a bunch of dorky stuff as far as I'm concerned. I will mention, though, that right now Jupiter and Venus are aligned in the morning. And for those of you who get out early in the morning like I do, just before the sun comes up, the two of them are aligned in a manner that makes it look like somebody's up in the sky with this massive searchlight. It's pretty cool looking. I would suggest checking it out. But that's really all I have to say. I'm working things long and short, and that's really all there is in this market as far as I'm concerned. If you try to get more out of it, I think you're just setting yourself up to get dinged. And that's basically it. Dr. K, you got anything else to add?
Just keep your tight. Volatility is liable to be enhanced with the Russian uncertainty going on. That's at the forefront right now, and the models will look for buying or selling pressure in terms of moving out of its cash position.
Very good. That's all we got, you guys. Thanks for showing up. Appreciate it as always. So no soup for you, and we'll catch you next time.
So long, everyone.